Welcome back to the cryptowrld channel, everyone. My name is Josh, and right now the Bitcoin price has confirmed a break below this moving average, which historically has preceded a short-term pullback. But when it comes to the long term, we're currently seeing a long-term Bitcoin on-chain indicator flash right now, which is extremely important to pay attention to. So in just a moment, I'll be talking more about that alongside Ethereum as always later in this video, so definitely stick around. First of all, we need to talk about this on-chain Bitcoin chart, which is currently flashing an important signal for Bitcoin. And what we have here on this chart, first of all, the blue line is the Bitcoin price on the daily time frame, the orange line is known as the balanced price, and the red line is the cumulative value of coin days destroyed. And basically, the balanced price and the cumulative value of coin days destroyed are derived from the movement of coins on the Bitcoin blockchain. So basically, if a bunch of Bitcoins are moving around, then that would alter these indicators. So that is why these indicators are known as on-chain Bitcoin indicators rather than technical indicators, because they're not based on the Bitcoin price, they're based on Bitcoin's blockchain. And the reason why this crossover between these two on-chain metrics is important for Bitcoin is because, historically speaking, if we're zooming out, taking a look at pretty much the last decade of Bitcoin's price history, historically speaking, when these two lines cross over, that basically signals that the Bitcoin price has just about completed the bear market. We're essentially at that bear market bottom territory, either just before the bear market bottom or just after the bear market bottom has taken place. So, for example, taking a look at this significant Bitcoin bear market that we saw throughout 2014 entering into very early 2015, if we zoom into that bear market bottom, what we can see here is these two on-chain Bitcoin metrics cross over just after the bear market actually bottomed out. And just to make it clear, the direction of the cross between these two metrics that we're looking for is essentially the balanced price dropping underneath the cumulative value of coin days destroyed. So once again, that's the orange line crossing underneath the red line. That's what we're looking for here for a potential bear market bottom signal. And now taking a look at the next significant Bitcoin bear market, which was of course the 2018 bear market, and zooming into that bear market bottom, what we can see here is the crossover between these two on-chain Bitcoin metrics just before the bear market bottoms out. So once again, at the end of the 2014 bear market entering into early 2015, we saw a cross in this metric just after the bear market bottomed out. And then at the end of the 2018 bear market, we still had a little bit more downside in the price action before we actually bottomed out after we saw the cross. But basically in both of those previous significant bear markets, this cross came into play very close to the bear market bottom, whether it was just before or just after the actual bottom took place. So historically speaking, when this balanced price crosses underneath the cumulative value of coin days destroyed, this means that the Bitcoin price itself is basically in that bottom territory, that bear market bottom territory, where historically speaking has been the best times to accumulate Bitcoin. Once again, that's just going off Bitcoin's history, because whether or not we perhaps have a little bit more downside to go in the somewhat shorter term for Bitcoin, like what we saw at the end of the 2018 bear markets, relatively speaking, from the Bitcoin all-time high to the current Bitcoin price at the time of the cross, the majority of the downside price action for Bitcoin has already played out. We have already gone through the majority of the downside price action, which was the case in 2018 and also at the end of the 2014 bear market entering into early 2015. And now taking a look at the present day, and once again, we have a very similar signal flashing right now that has only ever flashed at previous Bitcoin bear market bottoms, or very close to previous Bitcoin bear market bottoms. So just to summarize this on-chain Bitcoin chart, this indicator flashing right now essentially means that the majority of the Bitcoin bear market in terms of the downside price action has already played out. And relatively speaking, compared to the Bitcoin all-time high, we are essentially extremely close to some sort of bear market bottom just based on this chart once again. But remember, this is a long-term Bitcoin signal and does not make us immune to short-term Bitcoin bearish price action like what we saw at the end of the 2018 bear market. We saw that crossover, but we still had another dump in the short term for Bitcoin. It's just that dump wasn't actually that significant compared to what we had already seen. The majority of the bear market at that stage had already passed. And now, obviously, this is just one Bitcoin on-chain chart looking at two separate metrics. And obviously, we should never solely rely on just one chart alone. Instead, we need to look at a larger basket of information to try and work out the most likely scenario moving forward. But with that being said, this is still an important Bitcoin chart to at least consider amongst all of the other information that's out there. And now giving you a quick update on the Bollinger Bands indicator on the daily Bitcoin chart. And right now, after this expansion phase, the Bollinger Bands are currently contracting again. And this usually happens after we've seen a volatile move in the Bitcoin price, like what we've seen over the past 1.5 weeks or so. We saw a volatile move to the upside of nearly 30%. And obviously, this nearly 30% move to the upside in the Bitcoin price was a slightly smaller volatile move compared to these previous volatile moves to the downside that we've seen in recent months. For example, this first volatile move on the chart was around a 36% move to the downside. And in this second example, that was around a 43% move to the downside. And this could be due to a couple different reasons. First of all, we obviously ran into a lot of resistance just below around 25,000, as I've been talking about for a while now on the channel. And not only that, but if you're looking at the squeeze in the Bollinger Bands indicator just before this volatile move started, this recent squeeze formation was not as tight of a squeeze as these other formations that we saw in these previous examples. And usually, the tighter the squeeze in the Bollinger Bands indicator, the more explosive the outcome is. So this time around, this squeeze wasn't as tight as these other ones, which has essentially resulted in an outcome not as explosive as these other outcomes. But with that being said, moving over to this daily Bitcoin chart, and right now, as of recording this video, the Bitcoin price is currently testing this previous resistance line coming into play at around $22,000 per Bitcoin, which is currently acting as some short-term support. And that 22K level is very important for Bitcoin to hold above, because if we start seeing multiple daily candle closes below 22K, then that would potentially put us in a situation like what we saw in early April. As you can see here, we saw a breakout in the Bitcoin price above significant horizontal resistance after a lot of choppy sideways price action. And technically speaking, seeing a breakout at that time was a bullish signal, but the moment we confirmed a break back below that significant level, which at that time was sitting at around 45,000, the moment the Bitcoin price confirmed a daily candle close back below 45K, that there was immediately at least a short-term bearish signal. But the moment we broke this other support level, that was a larger bearish signal on this daily chart. So basically, if the Bitcoin price confirms a break on the daily time frame below 22,000, then immediately that should be a short-term bearish signal for Bitcoin, meaning that we could continue some sort of pullback. But below 22K, of course, would still have strong support down here, coming in closer towards around $19,000. And aside from those levels right there in the Bitcoin price, I would also be keeping an eye on the daily Bitcoin RSI, which is currently still in an uptrend. And basically, if the daily Bitcoin RSI breaks this uptrend and starts forming lower highs and lower lows, then that would be another bearish signal on the daily time frame, like what we saw throughout April. But as of right now, at the time of recording this video, the daily Bitcoin RSI has currently not flipped bearish just yet. We're currently still more bullish than bearish on the daily time frame. But obviously, this is all happening within a larger downtrend. Technically speaking, even though we might be looking somewhat more bullish at the moment in the somewhat shorter term relative to the daily time frame, the larger trend on the daily time frame is clearly still a bearish trend. This hasn't confirmed a reversal as of right now. And so because of that, I've been saying almost every day over the past few weeks that this time in the market looks extremely similar to what we saw in the first quarter of this year. But anyway, zooming into the shorter term, taking a look at the 4-hour Bitcoin chart, we have now confirmed a break to the downside below this 5-day simple moving average, with not only multiple 4-hour candle closes, but we also saw a small retest of this 5-day simple moving average and actually saw a rejection, confirming it as new resistance. So that there was another bearish confirmation in the immediate short term for the Bitcoin price. And as you can see, as soon as we got that rejection from this moving average, confirming it as resistance, we saw an immediate pullback in the Bitcoin price, just of course a small pullback because this is only on the 4-hour time frame. But with that being said, technically speaking, based on the break below this 5-day simple moving average, also based on the current trend in the 4-hour Bitcoin RSI and the current trend in the 4-hour Bitcoin MACD, technically speaking, when it comes to these short-term bullish and bearish trends just on the 4-hour Bitcoin chart, right now the trend is simply looking more bearish than bullish. And even outside of these indicators that I've just mentioned, if you're simply looking at the Bitcoin price itself on the 4-hour chart, we have already confirmed one lower high and one lower low, which is technically what a downtrend is. If we're putting in lower highs and lower lows, that is technically the price trending down. And obviously, if you've been keeping up to date with my recent videos over the past few days, I've been saying all of this over the past 3 days or so, talking about how this short-term bullish momentum is beginning to fade away and we're starting to see some more bearish signals in the short term. And now we're essentially seeing that that bearish scenario play out just on the 4-hour time frame. And as for potential bullish signals to watch out for, which we're currently not seeing at the moment on the 4-hour chart, but just to watch out for them, I'll be looking for some sort of reversal in the RSI. For example, if we hit oversold territories or we start forming higher lows and higher highs again, then that would be a bullish sign. Of course, if we see the histogram within the MACD indicator approach the zero line, or more importantly, see a bullish cross in the 4-hour Bitcoin MACD, that there would also be a bullish signal. And on top of that, if we confirm a break back above this 5-day simple moving average, which is currently coming into play at around 22.9k, that there would also be a short-term bullish signal. But as of right now, we are simply more bearish than bullish just on the 4-hour chart. And now getting into the Ethereum part of this video, this right here is the daily Ethereum chart. And right now, looking at the Bollinger Bands indicator, this is currently entering into another contraction phase, but not yet into another squeeze phase. So essentially, this means that the volatile move has already played out. And unlike Bitcoin, Ethereum, on the other hand, actually played out more of an explosive move to the upside in terms of this volatile move predicted by the Bollinger Bands indicator. In fact, measuring this volatile move in the price of Ethereum, we saw a 62% gain in the span of just 1 week. And this recent volatile move to the upside was actually bigger than these previous volatile moves that we saw to the downside in recent months. For example, this one during June, we saw a volatile move of around 54%, and this volatile move during May was around 42%. But when it comes to the current status on this volatile move, according to the Bollinger Bands indicator, which is currently contracting again, this volatile move has now already played out. Of course, that doesn't mean that we can't see any more upside price action. It just means that this particular volatile move that the Bollinger Bands were predicting has now already played out. This volatile move is now over, according to the Bollinger Bands indicator. But if you're zooming into the shorter term, taking a look at the 4-hour Ethereum chart, right now we still have an active bearish divergence in play, which simply means we're losing that bullish momentum that we've seen over the past 1.5 weeks or so. And so essentially, just in the short term, the bears are beginning to regain control over the market. But with that being said, even though the 4-hour Ethereum RSI and the 4-hour Ethereum MACD are currently more bearish than bullish, we still have this important Fibonacci level that I've been mentioning almost every day over the past 1 week, which is currently acting as short-term support. And that is currently coming into play at around 1470 to 1480. And as you can see, just recently, we've seen another almost perfect bounce from this exact level of support. But with that being said, while we're on the 4-hour Ethereum chart, taking a look at the 5-day simple moving average, which is currently coming into play at around 1550 to 1560. And right now, as of recording this video, the price of Ethereum is currently testing this moving average. And basically, if the price of Ethereum confirms a break back above that level that I just mentioned, then that would mean that this small break to the downside over the past 1 day below this moving average was essentially a fake out. But on the other hand, if we get rejected from this moving average, similar to what Bitcoin did in the short term, then that would be another bearish confirmation signal in the short term for Ethereum. So right now, when it comes to this moving average at the time of recording this video, there's simply a lack in confirmation at the moment because we're simply waiting on the outcome for this retest. But either way, whether or not the price goes up or down, you can actually make profits in crypto no matter what direction the price is heading if you watch one of these videos popping up right here on your screen. The video in the top left shows you how to make money if the price is going either up or down, and the video in the bottom left shows you how to make money in a choppy sideways price range. But anyway, that's everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.